comes with subsidized offerings, particularly lending. And in places like China and other places where governments have tried to provide subsidized lending, they have been failures in that people get the money, maybe not, but they do, but they never repay it. It doesn't go into this sustainable cycle that we see in microfinance. So when politicians put their hands, their mouths in the middle of microfinance, it creates very difficult situations. So in Pakistan, a group of clients went to a politician who wrote a letter and said that you don't have to repay, and for that matter, everyone in this village, this town, and this district don't have to repay. And when somebody says they're not repaying, I can assure you the first thing you think is, well, I'm not going to be the idiot who's still repaying. And it led to a massive, massive problem. The second thing, and this is a case of microfinance maturing, is people are borrowing from multiple microfinance institutions in certain places where it's being offered. Now, sometimes people can handle it, and sometimes people become over-indebted, and it's a real problem. This has led to repayment problems, partly in Morocco this was the problem, but in a particular region of India currently, and we expect will be a challenge in the urban and peri-urban areas of Manila in the coming years if growth continues the way it is. And then you have just traditional issues that affect business, bad management. I mean, when I started, I met this guy, and he sort of killed two microfinance institutions. He didn't have the leadership and also the stomach for it. This is not a, despite the vision being soft and fuzzy and warm, actually doing it on this ground is really hard work. And there is, you know, the idea that you're lending to someone with nothing makes us all feel good. But to actually make all of that work, there's a lot of credit discipline and training, and people are struggling. If I was sitting there and someone said to me, if I repay you, my family won't eat, you know, the credit officer actually has to say, still give me the money. I don't think I could do it. I'd probably start crying, you know. It's sort of, so I think these are some of the challenges we see in microfinance.
And approximately, what is the default rate in Asia for microfinance?
Well, in general, the default rate is, you know, sort of the non-performing loans, or you're getting about 97% repayment. It's very, very high. Now, some don't succeed, but among those that we would look at, we would expect that. We would expect what we call a portfolio at risk of less than 5%. So that's the remaining outstanding balance of loans with any overdues more than 30 days. We would expect to be actually below 2.5%, but 5% is normally a covenant we put in our financing agreements. So, sorry, you had a question?
Just to get a perspective on the size, you mentioned 17,000 loans in the tsunami-related area over about 3 years since 2006. So that's worked out to be about $3 million in total. That's pretty small.
Well, in Indonesia, yeah, it's pretty sad. So the financing for that program, I think there was a $3.5 million grant. The financing, I want to say it was about $2 million. I mean, it is small. I mean, if you think of it in 17,000 people, the amount of money required to create change is very small. And actually, in terms of Aceh, we don't think that program can expand that much greater. So in some ways, for the population we're trying to serve, we've kind of tapped out the market. But if you look at a place like China, sorry, Herman, you know, they're an estimated, if you look at the $2.50 a day poverty line, they are estimating under the World Bank that 630 million people live below that line. Let's say that's 130 to 140 million families, maybe even more given the one-child policy, but then you have older people living in the home. You know, we're talking about 70 to 90,000 people who have access today. The difference between 130 million and 70,000 multiplied by $150 gets us into the billions. So, you know, this is where the scale becomes such a major issue, and where we don't think that as an NGO we should play a role in financing directly, but we need to play a role in catalyzing financing. So right now we're working on a project in China with another local NGO to try to unlock the financing potential among organizations that should be lending to the poor, like the China Development Bank, the Agricultural Bank of China, but working with them to unlock that potential and actually reach that community. That's, I mean, and as an NGO and someone who's taking donations, we think that's the only role we really can play and should play. So, any other questions? Sorry.
Thank you. I want to ask, is there any mechanism that a measure that you use to measure the credibility of the poor?
And if yes, and if yes, how much? What's the percentage of the poor that you refuse to give the fund?
No, that's a good question. And for those of you who missed the first part, is there some kind of way that we score, like a credit scoring or something we do to figure out if someone can receive the money, and if so, who is left behind as a result of that? In the microfinance that we advocate for, the first question is, are you poor? And if you're not, you're the first person who's cut out of the universe, okay? The second question is, do you want to take a loan and what is it for? The third question is understanding how poor you are. And the fourth one is, are you willing to form yourself into a group with some other women and go through training and take advantage of this funding? So that's basically the credit scoring that happens in microfinance. It's for organizations that are trying to reach the poor. For those who are working with existing businesses, there tend to be risk scoring models and all sorts of things we think about in traditional banking. But in microfinance for the poor, it's very straightforward. It's fairly basic, but people have to go through an extensive training period and have to organize themselves, and one person gets a loan and then only does the next person. So it can take up to a year or two for people to actually, for the whole group to have received financing. In terms of who is this not appropriate for, as a target, what the organizations I know try to do is say, if in a community 100 people are poor and 20 of them are from the poorest, or 30 out of the 100. So 70 are kind of in the middle range poor, and then there's the poorest who are they're 30 people. They try to proportionally represent that universe in any of their clients. So if they got only people who are in that upper tier of the poor, then they wouldn't feel like they have been successful. That doesn't mean everyone can borrow. You have people who are destitute, they may be ill, they may, for cultural reasons, not be able to participate. But the idea is to try to replicate the percentages at a minimum so that you're really focusing on the mission that you have. Do we have time for any more?
Yeah, it's the end of the time.
Okay, I think, okay, is no more question? You can ask question later, maybe. Okay, your one last question. Last question.
Because I heard from some success stories of microfinance that each of the borrowers in the village will guarantee each other by providing, for example, by providing personal guarantees to each other. That makes because the social bond of the village will make the success of microfinance. I'm not sure whether it applies to every case of microfinance.
This is very much kind of one of the things about the Grameen Bank approach that has become very popular and sort of captured imagination. That you have a social guarantee that people collectively organize themselves together to improve one another's lives and to enable each other access to finance. And it's true, it was important. Some organizations don't do it anymore. People just borrow individually. The women themselves don't like it. I mean, if one of your group members doesn't repay, you don't get access to finance, and you didn't do necessarily anything wrong. It leads to a lot of upheaval and difficulty. I'm not close enough to the field in terms of why and whether people should or shouldn't do it. I mean, it certainly appeals. The villages, the meetings that happen are very friendly, warm affairs in most places. I think that we haven't seen an impact on repayment rates either way. Grameen Bank got rid of it a couple of years ago, and people are still repaying. That doesn't mean they've given up on the center, which is the 30 women coming together, but them sub-organizing into 5-member groups that then guarantee one another. That's been somewhat disbanded, but a lot of organizations still do it. Again, I'm not convinced that's why they repay, but as you start to get people involved,